Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES balanced above the previous day's VPOC and previous day's close, and actually even poked above yesterday's high where responsive sellers were active. At this point, heading into the open, we have to understand that the larger time frame bias continues to be bullish, but on the smaller time frames, we have to be a bit more flexible with our bias because at this point, on the upside, that 13.5 to 15.5 is really an important inflection point. On the downside, we're using the 02 quarter to 04 quarter as the micro bull bear zone, but that area has already been tested. That's the area where the downside shut off yesterday, and we saw a pretty decent reaction. So at this point, if we go back down to 02 quarter to 04 quarter, it would mark yet another test of that zone. And the more times you test any given zone, the more likely it is to break. So we will have to be a bit more cautious at the 02 quarter to 04 quarter today as compared to yesterday. So off the open, ideally, if the market is truly strong, it should hold above the previous day's VPOC of 2107 and the prior close of 2108. In the event of a failure there, we have to be careful at 02 quarter to 04 quarter. A break below the micro bull bear zone would bring the 98, 95, and the 91.75 to 93.75 initial support zone into play. The 98 level at this point is not really that strong of a level. It could be used as a downside objective if we're seeing a lot of weakness off the open, but it's not really a key support where the market has to turn around or is very likely to turn around. If we get a break below micro bull bear, we're probably going to go down into the 95 support level and possibly 91.75 to 93.75. Those are better spots for responsive buyers to step in. And because the larger time frame bias is bullish, we can expect responsive buyers to be active at pretty much every support along the way. So 95, 91.75 to 93.75, those are areas where we can expect a buy response in the event of a more weak market than expected, and in the event that we go down even lower than 91.75, we can still get a response at the 89 naked VPOC and the 86 to 88 zone, and the selling could even shut off by 86 to 88 because at that point the range would be quite extended, and 86 to 88 is a very key support area in itself. But ideally, you want to see buyers active at pretty much every level along the way, with the exception of 98, where it's not really as strong of a level. So that's something where we'll have to determine whether a setup over there is worthwhile in real time. But that's, in the event that we even get a downside push. Now, on the upside here, we have the previous day's high at 2112 as a short-term resistance level, and beyond that, the primary resistance is 13.5 to 15.5. That's really the major inflection point on the upside and the major hurdle on the upside. So at this point, if ES holds above 0708 and we start going back up to 13.5 to 15.5, the zone can be taken out, but that's really the primary resistance area that the buyers have to take out in order to assert their control on the smaller time frames as well. So if we get a breakout above 13.5 to 15.5, that would confirm the buy side back in firm control even on the smaller time frames, and from there ES can move higher to 1975 to 2175. That's still valid resistance and sellers can be active there. And then beyond there, the final resistance zone is 24.75 to 26 quarter, which marks the all-time high. Looking at the other markets, so far NQ is holding up relatively well. The Russell is maintaining the gains that we saw yesterday. If you are watching the Russell, keep an eye on the 1261 to 1262 area. That's a pretty decent high volume node in the Russell, and if TF can clear that zone on the upside, then that would just further confirm that we are getting some aggressive buyers active in this market. And again, the larger time frame bias is actually still bullish, and even if we broke lower, that would still continue to be bullish. But on the smaller time frames, we need to be a bit more flexible and nimble with our bias because the market can tip either way. It's tested the 13.5 level, but it hasn't cleared the 13.5 to 15.5 zone, and that's really the zone it has to clear in order to confirm that the buyers are actually stepping back in. until then, this is simply a very balanced market, and even now there is still possibility of failure at 13.5 to 15.5 for a move to some lower prices. So we have to be more flexible on the smaller time frames, but the larger time frame bias can continue to be bullish even if we go all the way down to 86.88 or 91.75 to 93.75. So off the open, we're going to be watching to see whether there is any downside momentum or a lack of downside momentum, which way the market is leaning, where the momentum is really present. And if we're not getting any strong downside momentum, then that larger time frame bias can come into play. And we're already seeing overnight that the market has held up relatively well. So off the open, keep an eye on the prior VPOC of 07. Again, as long as the market is fairly strong, it should hold above that. The 02 quarter or 4 quarter area now calls for a bit more caution. And if we are heading down there on strong downside momentum, then we probably want to avoid fading that zone because it's already been tested multiple times. And the more times you test it, the less likely it is that it's going to provide the same level of reaction that it did the first time around. So those are our main thoughts. Let's see which side is more dominant off the open and focus on trading in that direction. On the upside, 13.5, 15.5, main inflection point. On the downside, if we break micro bull bear, probably heading down to 95 and 91.75 to 93.75. So those are our main ideas. Let's see which side presses off the open, and we'll take it from there.